Good evening, everyone. Welcome to the Journey to Become Wealthy. My name is Kelvin Reed, and today is Friday. You guys know we got to do our market wrap up. And what a crazy week it has been, right? I mean, the market has been up and down and just showing crazy volatility on top of the super bad news we got on yesterday. So before we talk about it, I want you guys to like, subscribe to the channel, hit that notification bell so that you get notified when I make videos. All right, so yesterday the market started moving upwards after the president had a speech or whatever, but there was no positive news to follow that, and the markets came down immediately in the after hours. That the news that was reported was the GDP being a negative 1.4%, right? Negative 1.4%. And you guys know what that means, right? We're already having that FUD, fear, uncertainty, and doubt of a recession for this year or 2023, 2024. Well, this pretty much just solidifies it. So let me show you guys what I got, right? So this is what I've come up with. So first I had to start with, right? What does a fall in GDP mean? I just kind of, break it down for those of you who do not know. Economists traditionally use gross domestic product, GDP, to measure economic progress. If GDP is rising, the economy is in solid shape and the nation is moving forward. On the other hand, if gross domestic product is falling, which we got a negative 1.4% yesterday, the economy might be in trouble and the nation is losing ground. So not only are we currently in inflation up 8.5% during the last report, but GDP is dropping. So prices are up here, but the economy is down here suffering. So what does that mean, right? That is what people call stagflation, right? Where we kind of get to this point where we're in a between inflation and a recession, and there is no middle ground. We continue to kind of bounce back and forth until we meet that equilibrium. But until then, we're in stagflation. That is not a good thing. That is one of the worst conditions because there is no way to get us out, right? Normally during an inflation, the Fed increases interest rates to kind of bring inflation down, and during a recession, the Fed drops the interest rates to bring us out of the recession. At this point, what do, right? Do you increase the interest rates or do you decrease them? Right now, we're in that point where, I think it's the worst of the worst, basically. Now, I found an article that I really like, and I want you guys to kind of check it out with me. Well, actually, let's check out the market first. Let's look at how bad it was. The Dow was down 2.77%. S&P 500 is down 3.63%. NASDAQ down 4.17%. Russell down 2.81%. You guys, I don't know if we've seen a day where each market has been down greater than 2%. Now, we may have seen that day on February 24th when Russia invaded Ukraine, or on March 16th, I believe, 15 to 16, when the Fed did their first interest rate hikes. But maybe, only maybe, I don't know if it was even this bad. This is bad, guys. This is bad. So here we see NASDAQ wraps its worst month in nearly 14 years as recession fears grow stronger. So this is the worst month in nearly 14 years as recession fears grow stronger. So you guys keep that in mind. What do we do, right? And we're going to talk about that. U.S. stocks plunged on Friday with the NASDAQ marking its worst month since October 2008 and the S&P notching its worst month since March 2020 on the onset at COVID pandemic. Tech-heavy NASDAQ fell 4.2%, dragged down by Amazon. Amazon had bad earnings and brought down a lot of the market heavy, that 4%, which dropped nearly 15% after it missed earnings expectations. That's Amazon. S&P 500 shed about 3.6% on Friday, while the Dow dropped 940 points to 2.8%. The most closely watched inflation reading released Friday, the core personal consumption expenditures price index rose 5.2% from a year ago, spelling more trouble for the economy. Recession, stagflation, inflation, all these big words, you guys. I know many of us haven't seen it. I'm 31 and I've never seen it myself. So again, what do we do? And I'm going to tell you guys what I'm going to do, at least based on what history determines. The NASDAQ fell around 12% this month. S&P lost more than 7%, and the Dow was off by nearly 4%. And that's not including February and March. This is only this month. So we've officially hit that bear market correction, whatever you want to call it. We're down. We're taking a beating right now as far as April. And people always say selling may stay away. It's sort of saying like that for the stock market because May is usually one of the worst months of the year for the stock market, and we're going into May, so I do not see things getting any better, not going forward. An ever-growing number of headwinds are leaving investors unsure what comes next. This earnings season has been lukewarm, and the U.S. gross domestic product dropped by 1.4%, falling well below analyst estimates of a 1% gain. So that means down 2% based on what they expected. Federal Reserve has shifted to a hawkish stance, indicating it will increase the pace at which it raises interest rates next week. So things are right now in a terrible condition. Fear is crazy. You guys know I like to check out our fear, right? We are currently at a 28. Yesterday it was at a 36. So we dropped even more. And then last week we were at a 40. Right now we're at a 28. Y'all, a lot of people keep saying the recession is here. And I'm not sure. I don't know. But I'm starting to believe it because every time you read about a recession, they say we don't know about we're in a recession until it's gone, until it's too late. Well, guys, looking at all this data and learning from history, we may actually be in the recession. And most recessions last a year and some change. So this may be the worst year to actually start investing in the stock market. However, we talked about the transfer of wealth, right? We talked about that. And the transfer of wealth starts now. That is only if you're patient and willing to invest in this kind of market. I mean, when everybody else is fearful, be greedy. When everybody else is greedy, be fearful. Warren Buffett, right? Right now, I am continuing to dollar cost average. I am remaining consistent even in this market. A lot of my stocks are down. However, I continue to add on the worst days, usually Friday. And on pay, of course, pay weeks mainly. Pay week, y'all know we got to make sure we depositing something into our account, even if we're not using it. On pay week, I am buying a little bit of each company, whether it's $5 every time, $10, $20, $100. If I like a company more, or if it's down that heavy, I buy. I'm buying every week or every 2 weeks. So I'm continuing to dollar cost average, bringing down my average. So you guys know when you buy a stock, it shows you your average over there. Hey, your average is $12. If you buy it at $6, you bring your average down. Now your average may be $11 or $10, or depending on how many shares you buy. So I'm continuing to dollar cost average because now is the opportunity to own companies for way cheaper than we could have within the past 2 or 3 years. That transfer of wealth, because when these things boom back up, that is when millionaires are going to be made. On top of the fact that we know how to trade in a down market, right? When the market goes down, we do put options. So although my stock portfolio has consistently gone down week after week, I have managed to still hold the same value in my account, and that is by selling options. So if I lose, most time I look at the day. Hey, if I see I'm losing $500 because my stocks are dropping, I make my goal for that day to gain $500 based on trading options. Though I balance it out, I am hedging against it. And again, when those stocks go back up, guess what? My account is going to go crazy. Now, this has also made me, because I'm a technical person, right? I'm analytical. This has made me kind of change my plans because it's going to be hard for me to beat the market at this rate. So instead of me trying to beat the market, I'm going to continue to average down. I'm going to continue to buy options. I'm going to continue to make money. So I may not make that 20% to 40% this year as far as gains. However, next year or the year after that, I still plan on continuing to average down and see those returns over time. Long-term investing. But again, we're going to keep making this money in the short term because, hey, we're going to make sure we can eat a steak every week or whatever you want to do with your money. Whatever your goal is with your funds or on the journey to become wealthy. We're still just trying to get there. And if at all possible, I promise you I'm not going to quit. So I'm going to get there. Now, I just readjusted my goal, right? I had to make it. But hey, it's okay. I'm still shooting for that. But I knew it was possible. Now it just means I'm going to work 2-3 times as hard to get there. So that's what we have, right? We may be in a recession. We have fears of stagflation and inflation. The markets are extremely volatile. But however, we are trying to make money on the way up or down. I want you guys to continue to be diligent, continue to add into your accounts. And when this thing is over, we're going to buy the dips and we're going to watch it rip. So I thank you guys for joining the Journey to Become Wealthy. Hopefully you enjoyed this video, and I'll see you later.